I've recently been switching into Solana. I'm looking at risk rewards here, and I'm just thinking, could this be the ETH of this cycle? You can run all of social media, you can run high frequency trading. All I think is use case. Use cases explode. That's why I'm very bullish in all of that.
Solana aims to demonstrate a set of software algorithms. This is done to eliminate software as a performance bottleneck compared to blockchain. This combination enables transactions and their scalability. The Solana mechanism satisfies the three main ideal attributes of a blockchain, as this type of cryptography is 1. Scalable, 2. Secure, and 3. Decentralized. This blockchain works on POH and POS consensus models. POS allows validators to verify transactions based on the number of coins or tokens they own. On the other hand, POH allows these transactions to be time-stamped. This makes them easy to verify. Solana's meteoric rise in 2023 has paved the way for an even more promising 2024. The platform, which boasts a successful community of over 2,500 developers, has been crowned with a notable increase in developer retention rates exceeding 50%. Additionally, with daily user transactions reaching 40.7 million and an increase in users paying daily fees, Solana has become a central blockchain network for cryptocurrency enthusiasts. The latest announcement from Solana developers reveals that token expansions, a feature designed in collaboration with large institutions, will be available in the first quarter of the year. These extensions will add versatility to token creation by simplifying the process and providing high compatibility. Other features include confidential transfers, transfer links, and metadata pointers, and pave the way for a more transparent and customizable token platform. In today's video, we will tell you about Raoul Pal's view on Solana, as he thinks that Solana use cases might help it to go beyond $1,000. But before we get to the video, make sure you subscribe to our channel and press that bell icon to never miss an update. New capital is coming into the crypto space because it is deviating from the risk curve. So we saw Bitcoin rise in the first part of what we call the crypto spring. So the whole year is Bitcoin. The ETF way of thinking is really useful. The ETF is a commercial agreement between commerce, the commercial economy, and this new economy. So, we just concluded a trade deal. This doesn't mean we're going to have trade, but it looks like we're going to start attracting foreign direct investment into the crypto economy. What happens then is the money goes to Bitcoin first, but everyone who has been in this market has run it by owning Bitcoin. So the next thing they're going to do is the Ethereum ETF. One of the greatest gifts is you can buy a fractional asset. You can become a billionaire, or you can make $200 a week, and you can put 10% of your money into it because it's fractional, and it's the first truly real asset global. It's the same for the person in Brazil as it is in India or for Philadelphia. It's an asset. It empowers people. So there is a possibility. This is the first time that the little one has had the opportunity to lead institutions. It is not easy. Many crashed along the way. Everyone told them to wait, not to use leverage, and people aren't listening. They lose their minds in the middle of these things in a bull market. But if they could just maintain perhaps a periodic cost averaging method without the use of leverage and integrate it into their accounting system, their chances of success would be extremely high. And then we come to the forefront, namely the institutions. What you want to do is compare things to Bitcoin and see where things are currently. Ethereum has always been very interesting because of the overall decline. It has not fallen 90% compared to Bitcoin. Many existing alternatives do this because we know it's a huge ecosystem. Additionally, Ethereum has become deflationary during high activity because in reality, the highest activity occurs in a bull market. This therefore becomes rare in a bull market. And if you think about institutions, they like things that make money, so they don't like gold because it doesn't have a return. We have Solana supposedly at 65,000 TPS. We have a layer 2, like a more or less identical Polygon, but less secure than a layer 1. They say it's fast enough to handle the entire securities industry. Twitter only runs at 24,000 TPS, so you can manage all the social networks. You can do high-frequency trading. You can do everything. If you think Ethereum as the Android economy, then it's a big open source network where you can do a lot of different things. And Solana is more like Apple. It's like a single operating system, but very capable. Your Android phone can communicate with your Apple phone, so in the end, everything works. NFTs are just one asset in the Ethereum economy. if we compare the stock market versus the real estate sector, the stock market has outperformed the real estate sector by approximately 18 months. And the interesting thing is that the crypto cycle is the same as the economic cycle. Follow the NFT cycle and they will spin because everyone threw up. Anything to make money because now everyone is losing money. So the best way is to sell some of these assets, and these assets will eventually find a basis. We all started earning some money again. We all go out and buy NFTs, and before you know it, we're all bidding on crypto punks again. While discussing this case with Solana, they broke the NFT squeeze, meaning they can create 1 million NFTs for $100. Now, they have a very cheap and very fast chain. An NFT is therefore just a contract that lives on a chain. Everything is derivative. Everything is contract. And they can all be unique, but also invoices. All invoices. When tickets like this are issued, they cost less than printed tickets. It's cheaper than printing things. And that enables a lot of use cases that we've never done before. And having a chain that fast, if it turns out to be correct, means you can use it for trades, which you couldn't do before because blockchains were too slow. If you think about it, what happened in the high-frequency trading industry has only one thing to do. They are fighting one thing, the speed of light. They have fiber optic cables and try to transmit the information to the central office and send it back as close to the speed of light as possible. That's how fast this system is. This is the quickest use because money is incentivized to be invested where it can yield the most benefit. All assets in financial markets, stocks, are worth $200 trillion, and asset class bonds are worth $200 trillion. This is where you get full saturation. Remember that within this cycle, there are also CBDCs. This is when we end up with 3 billion people using crypto rails. So all this comes. The Bitcoin ETF, and people view it as an injection of liquidity into the crypto economy. This is a commercial agreement. Trade deals start working when people start getting a return on their capital in this new economy, and then they accumulate. Crypto assets are not down 80%. The Nasdaq fell 35%. Long-term growth technologies like ARK fell 78%. It was the recession. So we have forward-looking markets because they now understand liquidity cycles. This is why they are increasing and continuing to increase. Governments depend on the money we put into them, so we don't have enough taxes because the economy is too slow to pay the interest on the debt. So what is done is to devalue the currency and pool the debt between everyone's losses. Yes, socialize the losses. And the only people who manage to catch up are those who can buy scarce assets. So if you divide the S&P 500 by the Fed's balance sheet, it's pretty much stable since 2008. Gold is stable, real estate is stable. There are only 2 assets that have outperformed the balance sheet, namely cryptocurrencies and technology, as both are in exponential growth phases. So the problem is that it continues to make the rich richer and the poor poorer. GDP growth is measured by growth in population, productivity, and debt. We have completed the debt growth game, population growth. No one will have more children. So there are no children, so you have to be productive. But AI does 2 things. First, it's like endless new people, endless new workers, endless knowledge workers, and then comes the robots. They are infinite physical workers. So it's like an infinite population. It's a really interesting concept, and that leads to productivity. That's all for today. Let us know your views in the comment section below, and don't forget to like this video before leaving. Thanks for watching.